I know A&D is really known for non-QM, but we do a great job of conventional FHA financing. So with that being said,
Let's first kind of zoom out and define what is a boot.
I've heard this term before and I don't even really understand. So maybe you can enlighten us. I've heard the term reverse 1031. So can you kind of break out what that is? Is that something that we do here at A&D?
Going to be subject to immediate capital gain tax, and that could be things like mortgage reduction or cash proceeds. And so, to be perfectly blunt, to identify those pitfalls, because if you're not actively listening, you might lose the opportunity to present this option to the client. And if you're not actively listening, you might present them something that really might not be the best fit for your borrower.
All right, good afternoon, everybody. As everyone just connects to audio, we'll give it just 2 seconds for everyone to get connected and we'll get going on today's presentation. Thank you all for taking time out of your busy days to join us. We'll get going here in just a second. Well, I'm hoping everyone is connected to audio at this point, so we'll get going. We got an exciting topic. I'm sure we'll have a lot of questions and stuff to be asked, so we'll get right into the meat of the conversation. So today's presentation is on mastering 1031 exchanges for mortgage brokers with Brennen and myself. So we can go on. There we go. Here's today's agenda. We're going to do a brief introduction on A&D mortgage. And then we'll get into understanding 1031 exchanges, a little kind of 101 information on how to navigate those, some of the benefits for real estate broker or real estate investors, the role of the mortgage broker, mortgage originator in this process, navigating some of the complexities, talk about the pitfalls, how to avoid them, and give some examples, which I'm excited about, to see some live examples of a 1031 exchange scenario and also some docs from a file that we closed recently. And then we'll talk a little about next steps and then lots of times for your Q&A. Just a little brief webinar etiquette. If you can, please, everyone is muted. Everyone's phones are muted and videos are off. So if you can, please put your questions into the chat and we will answer those. There's a portion at the end of the presentation where we can answer those and go through those questions for you. If you can, please, it's hard for me to do. I got to move my phone right here out of the way so I'm not distracted. If you can move those phones so you can stay engaged with the presentation. Okay, I see the chat is disabled. So if you can't put your questions in, there should be a Q&A option where you can put your questions in there. We'll answer them from there. I've got both tabs open, so that will be fine. But if you can, so we don't get any repeat questions, just keep tuned in there and muted if you can. And then last thing before we move on to A&D Mortgage, this call is being recorded. As you guys probably all get the warning message that things are being recorded, we will get the presentation recording out to everyone within 24 hours of this presentation. All right, a little bit about A&D before we get into 1031 exchanges. If you don't know, A&D Mortgage has now been around for over 18 years. Most people know the name A&D Mortgage, but don't realize that we're also backed by the Imperial Fund, which was founded in 2014 to invest in non-QM loans and hard money loans. It makes us a little bit different, gives us the ability to do securities for the A&D mortgage originations through our wholesale operations, and allows us to write our own guidelines and service our own loans. A&D's footprint, we just about, I think hopefully this year we'll have this whole map filled out. So we have just a few more states left to be licensed in so we can be truly nationwide. But as you can see, we lend in almost every state in the US. We do offer delegated, non-delegated, and wholesale originations. You can see our state's license, and on top of standard license states, we do honor the 40 states that allow you to originate business purpose loans without a license, so you can do those with us as well. Here are your speakers. I'm really more of a moderator today. Brennen is going to do the lion's share of the speaking, which I'm excited for. But my name is Mike Pearson. I am the Senior Business Development Manager here at A&D Mortgage, and we do have Brennen Moloney on the call as well. Brennen, I'm excited. This is why he's one of the brightest people I know in this company, so I'm very excited to be sharing this space with you today. Brennen is an underwriting team lead at A&D Mortgage and has a lot of experience working on 1031 exchange loans. So I'm excited because I know just enough to act like I know what I'm talking about, but it's good to have an expert on the call as well. So I appreciate you joining the call today.
Yeah, thank you so much, Mike. And we can tell that Mike is in sales based upon his very
That's right.
kind words he has to
I'm
say
I'm the
here.
talker. I'm not the brains, that's for sure. All right, let's move on. All right, so Brennan, 1031 exchange. We talk about them a lot. So break it down for us. What is a 1031 exchange?
Yeah, so zoomed out approach, what is a 1031 exchange? And ultimately we'll get to why is this relevant? How can we use this? And what is the purpose? Well, in the current environment that we're in, think about 2020 to 2022, we saw some pretty unprecedented rises in home prices. And so as prices increase, you gain equity. This is all fantastic. You sell your property, you make a ton of money, everything's good until you get that IRS bill at the end of the year. That might sting a little bit once you see how much you got to pay. So the idea behind a 1031 exchange is it does not eliminate capital gain tax in most scenarios because you have to pay capital gains based on the value appreciation. What happens is that's not eliminated. However, it is deferred. If you buy something called a like kind property, this is for investment properties only. We'll talk more about that in a little bit here. But as long as you buy another investment property, you can go ahead and defer those capital gain taxes and continue building your real estate portfolio. So it's carved out in the IRS, and you can go to the IRS website to get all sorts of nitty-gritty details. And that's a little bit about what we're going to be talking about today is how can we use these? How can you guys as mortgage brokers go ahead and apply these to get more business?
Excellent. Well, so here's a little bit more information. That's the one I want to ask you about was that like kind thing. It's a question I get from time to time. So I know, some people have asked me like, so if it's a like kind, do I have to do single family to a single family? How does that work, Brennan?
Yeah, so like kind is not necessarily single family to single family. It could be single family to condo, residential to residential. And when you read resources such as the IRS website or you
Hmm.
read from investopedia.com, you'll see that they actually have it fairly open and open to interpretation for a like kind property. So, for instance, you could do something like a multifamily property and go ahead and sell that and apply the 1031 exchange rules for an industrial building. Now, with that said, the majority of us here are residential lenders. So, going from an apartment building to a shopping center, those aren't really the transactions that are going to be relevant to us. However, there might be scenarios where you can take something such as a mixed use to a single family or things of that nature. Now, the caveat that I want to say is that I know a lot of things, but I am an underwriter. I am not a tax professional. So we're going to talk in a little bit here about qualified intermediaries or QIs, and those are third-party companies that help facilitate the 1031 exchange. So make sure that when you're working with your borrower on these, that your borrower is using the resources such as the IRS and that they're consulting their 1031 exchange qualified intermediary in order to ensure they're getting accurate information. We have a lot of knowledge here, we have a lot of experience with these, but we're not in the business of giving tax advice. So with that said, those qualified intermediaries are great. They're going to go ahead and when you sell the property, it's going to go ahead and put the funds into a third party exchange. And then it's going to ensure that different timing and tax requirements are met. And then from there, it will go ahead and defer those capital gain taxes.
Nice. And am I right, just real quick, circling back to that like kind, am I right in saying that I could sell an investment property and take those funds and allocate them to two different properties? Isn't that the case? You can do from one to two different properties, something like that?
Yep. So you can do up to three properties. So when you sell one property, you can go ahead and allocate those funds for up to three different properties.
Very nice. Okay, let's go into some of the benefits for real estate investors. Obviously, as you mentioned before, these are business use investment properties. So the primary person in these loans is usually going to be a real estate investor. So can you break down some of the benefits for real estate investors for us?
Yeah, absolutely. So think of it this way, a lot of the investors that we work with, there's different types. So you could have your classic fix and flip. So they might buy a property in an up and coming neighborhood and they might be able to get a very good deal on it. They fix it, they flip it, they get it ready to sell. They might even own that property free and clear, taking the value from 50,000 to 200,000. But now they want to get out of that particular market. Maybe they're moving, maybe they live elsewhere, they want to have investment properties closer to home, or they just want some geographic diversification. They can go ahead and sell that property that they may or may not own free and clear. It doesn't matter if they have a mortgage, we'll pay off the mortgage and take the net proceeds into the 1031 exchange, but they can leverage it and they can get higher valued properties, right? Because that property that's worth 50, 100, 150,000, that property's value appreciation can only go up so much. Whereas if you use leverage and you use a mortgage to purchase a more valuable property, the equity gain that you can get from that value added property could be a little bit higher of a rate of return due to the fact that there's a bigger value appreciation, or you can just get into different markets. A lot of these investors might be aware that, hey, this market could be on its way out, but I know that this market is going to be up and coming in the next few years. I want to get in. Let's go ahead and defer those capital gain taxes, keep that cash on hand so I can maximize building my real estate portfolio.
Very nice. All right, so that's our borrowers, that's our real estate investors there. So I would assume most of us on the call today are originators or in the lending space. So what's the role of a mortgage originator in this process?
Yep. So I've been on both the origination side and the underwriting side. And back in the day when I used to hear a borrower say 1031 exchange, my heart would skip a beat. I would be a little stressed out. I gotta, do I have to understand the IRS tax requirements? But I promise you guys, once you understand what this stuff looks like, and we'll show a couple examples towards the end, it's actually not too bad. We can figure this out. As long as you know how to deal with when a property is being sold and applying those net proceeds, you can do this. So what your role is as the LO is to go ahead and help guide the borrower through the documentation requirements between you and your processor. Make sure we're getting everything that we need. It's going to comprise of the settlement statement or final CD from the sale of the prior property. On that CD, it'll show where the funds get dispersed, and then you get documentation from the 1031 exchange company. There's one called IPX that's fairly popular. So you'll get a document from them and it shows, hey, we're holding all of these funds in the proceeds here. And so once we see that those funds are held, then we'll be good to go. And now one question with this that we get is, why or how is a mortgage broker involved? If they're selling a property, aren't they just going to buy another one? But again, a lot of times people are trying to upgrade and purchase higher value properties. So with that, if you're only getting 150, $200,000 of proceeds, but you're trying to purchase a $500,000 property, you're going to be involved. We need to have a mortgage broker involved, and we need to also help guide the borrower through this process. And it's nice to be creative because it gives you the opportunity of, hey, borrower, have you ever heard of a 1031 exchange? Based on your timing requirements and the scenario that you're bringing to the table, I think we have an opportunity to defer that capital gains taxes, keep as much cash as possible in your pocket for improvements and for your portfolio. So you can actually provide a professional recommendation to your borrower and provide this to them as an option and advise them that this is a possibility, because a lot of borrowers are not aware of this. You guys, as the industry expert, being creative and coming to the table with ideas that your borrower might never have heard of, that's one of the value adds that you guys can provide being in the industry.
So then am I right? I'll try to break this down a little bit. So am I right in saying then, based on the information, the documentation you mentioned a second ago, that the 1031 exchange is basically used as an asset, like a down payment, essentially, when it comes to the lending side of things?
Yeah, so we will treat it as fully liquid as
Mm.
long as we get what we need, and we'll show you specifically what that looks like towards the end of the presentation. But
Got
yeah,
yes.
yeah,
So that
fully
answers
liquid.
that probably answers the question that we got previous to this. A couple people requested a question. It was, does A&D charge more for doing a 1031 loan or anything like that?
Nope.
No. So
We We'll review it. Honestly, we might even thank you because now we don't gotta have to be fishing through all these asset statements, asking about your large deposit. Oh, you made a payment to this
Oh,
company.
don't you
So
love digging through piles of documentation, Brennan? I thought that was
yeah,
what got you going.
yeah. No, if we can get just a handful of pages and get 300,000 of assets from it, your underwriter's gonna love you.
There you go. Okay, let's go on to our next slide. So yeah, this was a new one for me. I mean, I have done a few loans, 1031 loans through the years or whatever, been part of many loans, but I didn't realize there was all this, we say complexity, but it really comes down to a couple of time frames. So can you break those out for us?
Yep. So it's pretty much split into two different time periods. And it's crucial that we meet these because if you don't meet these requirements, it might have been all for nothing, and the borrower is going to be on the hook for those capital gain taxes at the end of the year. So it's crucial that we meet these. So there's the 45-day rule, and that is for identification. So you have to identify and purchase up to 3 properties. So no more than 3, but up to 3, at least 1, of course. If we're not purchasing anything, then this doesn't apply. And it needs to be specified in writing. Again, cannot emphasize enough, work with your 1031 exchange company. They're going to help facilitate all of this. They're going to make sure that you get the documentation in writing and that it's in compliance with the IRS regulation. So we meet that identification period. So when working with your borrower, make sure that we're being realistic with this because if you're an owner occupied example, and again, owner occupied is not for 1031 exchange, but when you're purchasing your primary home, you're going to care about the color on the walls and what cabinets are there and how many square footage, right? So for an investment property, you got to understand your borrower. Is this person going to be really specific about the property and are they making emotional decisions or are they ready to move quickly, identify the property and pull the trigger on it? They got to be ready to move. And then moreover, there's the 180-day rule, and that's how long we have to close. And so it's super crucial that we can close within 180 days. Now, with that said, 180-day closing, I would say that's pretty generous, but also be mindful. If you have your borrower who, again, is dragging their feet, getting you their documentation, their debt to income ratio is maxed out, they're having all these problems, they might not be the best candidate for a 1031 exchange. Instead, you want to have a borrower who's organized, moving quickly, because the last thing we want is to have them on the hook for these capital gain taxes at the end of the year. And so, what happens if they did not identify the property within the first 45 days? Again, but they do still close within the 6-month period. So again, based on my research, it appears that they would be liable for the capital gain taxes. So this whole 1031 exchange process, it was just essentially a lot of paperwork. And then one thing we failed to mention earlier, A&D Mortgage is not going to charge a fee for 1031 exchange, but these qualified intermediaries, they got to get a paycheck somehow, right? So they're going to charge a small fee, the qualified intermediary, and you can have the borrower. The borrower is more than welcome to shop around to different intermediaries as well. But that's what it looks like. Hopefully that answers your questions, Ronnie. Great questions.
Perfect. All right, so here we go. Some pitfalls and how to avoid them. We have a long list here, and everyone's going to get the presentation and recording, so I don't expect you to go through these bullet by bullet, Brennan, but what sticks out to you? What are some important things not to forget about?
Yep. So as mentioned, the timing requirements and the definition of like kind, which we've discussed about at length here, but then also make sure that this is worth the borrower's time and money. So when they're identifying these replacement properties, they should be good investments. So you got to make sure your borrower understands the market clearly. And then also identify qualified intermediaries, identify the good ones, right? Make sure they're reputable. I'm sure there's some great mom and pop shops out there, but if there's no ratings on Google, maybe we should be asking some questions about who they're doing business with. Because if the 1031 exchange company is dragging their feet and taking a while to fulfill their documentation requirements, it can lead to issues, right, for getting things closed in time. So those are a couple things that can happen. And then watch out too, sometimes it might be a scenario where does the borrower live there? Do they not? Do they have an accessory dwelling unit? So it's classified as owner occupied, but they rent out the mother-in-law suite. We need to make sure that these are genuine investment properties. And if there's any questions, then make sure you're consulting the IRS tax code and getting with the qualified intermediary for that.
All right, we had a question come in that really comes back to the last slide when you're identifying those three. And I've heard of this before, the 200% rule. So is there a thing where there's I'm going to butcher this up, but you can't put in just for any kind of offer, right? Doesn't the property can't exceed double whatever the property you're relinquishing is? Isn't that how that works?
Yeah, thank you so much, Ada. So the 200% rule again for the IRS, it's a rule that says your borrower can identify any number of replacement properties as long as the total fair market value of what is identified is not greater than 200% or more of the market value of what the previous property was sold.
Perfect. And then just real quick before we move to the next slide, you mentioned I forget qualified. I forget what QI stands for, to be honest with you. What was that? IPX? Was that the name of the company you mentioned before, the exchange?
Yeah, IPS is
IPS.
one of the bigger ones, and then you can take a quick look through Google. And I'm going to be very honest. I've done a fair amount of these, and about 90% of the time it's IPX. So this is not an advertisement for IPX. We are not affiliated with IPX. It's just what I see now in terms of the quality of them. From an underwriting perspective, they get us the documentation that we need. However, from a client service perspective for the borrower, I cannot speak to that experience. So do your research, get on Google, read the reviews, and you can see if you just Google qualified intermediary 1031, you got about 20 popping up on the first page.
Very nice. Okay, let's move into our examples here. So first was kind of a scenario. To break this out, was this a scenario that came into underwriting?
Yeah, so we actually at A&D Mortgage under our DSCR program, we can go ahead and do mixed use properties. So that's something that we offer here. Not every lender does. And so in this example, we have a borrower who had owned one several years ago and he had an initial purchase price of 1.5 million. And what happened is through time, right, the property value doubled. So now think about that. You can sell a property for 1.5 million of capital gains, not to mention if you've paid down your mortgage financing. So you could potentially be walking away with 1.5, $2 million. But with that, there's going to be a tax liability of hundreds of thousands of dollars. And so he recently found another property for sale that's valued at $4 million. And so he wants to sell his current one, it's mixed use, and maybe purchase that $4 million one. So now what he can do is sell the 3 million, go ahead, get that new one, and then he will not be experiencing those property taxes or those capital gain taxes. Again, though, they get deferred, right? So should he ultimately sell the new property down the line and not continue doing 1031 exchanges, then what will happen is all of those capital gains will become due. So one thing with the tax code too that I want to talk about, should borrowers continue having a real estate portfolio until death, they can actually use that as a mechanism to defer the capital gain taxes and essentially eliminate them, because once the property is passed down through inheritance, there are cases where those capital gain taxes can get eliminated as long as they continue doing this up until death. And with that said, before you make these promises to your borrower, of course, research the IRS tax code, but based upon the research that we were doing, that's what it looks like. And I think that answers Brandon's question about, is there a time period that brings you outside of capital gain rules? In the borrower's lifetime, there is no timeline that will take you out of the capital gain rules, but again, upon death, it could potentially go away. And then another thing too, is keep in mind that the IRS they can change the rules and change the laws over time. So, sometimes it's a bit of a cat and mouse game or a never-ending cycle. So make sure you're staying up to date on the latest changes.
Very nice. So here we have some sample documentation. So guide us through this. I'm assuming this is a letter from the exchange to the borrower,
Yep.
or
And
excuse me,
so
to
when
the
we
investor.
Yep, the borrower, investor. And so basically all this is saying is, hey, we are your 1031 exchange company. We are holding $98,430. Based on what we've received, you had sold your property on November 2nd, 2023. 45 days from now, you need to make sure that you have identification of your potential replacement properties. So it gives you that date, December 17th. Moreover, you're going to need to go ahead and purchase the replacement property. It must be one of the properties that you identified previously, and you have until May 1st for this. It tells you that no extension is allowed if your day, so like let's say May 1st, falls on a holiday or a weekend or something like that, there's going to be no extension for that. So it doesn't matter if May 1st is your mother's birthday. We love you, Mom, but we still got to get this closed. So that's a little bit about what that looks like.
We'll hang out next weekend.
Yeah, yeah. A couple questions coming in. Let's see here.
Oh yeah, so we asked for a re-explanation of the 200%. That's probably because of how badly I beat that up. So can you run through that with us again?
Yep. So basically, the idea is that the value of the properties that you identify, and again, it allows investors to identify. So this is actually different, and so I could clarify it. So I'm going to be very honest. I'm flying by the seat of my pants here, but 200% rule says that they can actually identify more than 3 properties as long as the aggregate value of those properties is not more than 200% of what you sold the previous property for. So let's put this into English and give an example. So if I sell a property for $100,000, then I'm going to be capped at $200,000 of additional properties. So I could purchase, for instance, 4 properties at 50,000 each, and then that would be the cap. And again, my classic disclaimer, consult the IRS before we start making promises to our borrowers on this, but that's just from a quick Google search on the 200% rule.
Very nice. Ernesto asked, I'm sorry, we're moving on, but let me go back real quick. It said in example number 1, can the borrower use the profits from the sale of his initial property for the down payment on the property that he is buying? Is the option he uses for the down payment taxable right away or tax deferred?
Yeah, so the idea behind the profits is that it kind of gets split up into 2 portions, right? So let's say it was originally purchased for 1.5 million, and just for the sake of simplicity, let's say it was 100% financed, that 1.5 million. Let's say throughout the course of the years, the balance was paid down to 1 million. So paid down the mortgage balance by 500,000, and then he sells the property for 3 million. So what's going to happen is he's going to walk away with $2 million. Now, what happens with that 1.5 million could potentially be subject to capital gains taxes, but then that 500,000, I don't believe there would be any tax liability because that's just equity that was built up from paying down the mortgage. So with that said, you can use that 500,000 of equity built up from paying down the mortgage, and you can go ahead and use the 1.5 million of capital gains towards the down payment on the new property. And the taxes, the idea is that there would not be a tax liability due immediately. By funneling the money through a 1031 exchange first, what happens is the taxes are deferred. not eliminated, but deferred. Hopefully that answers your question, Ernesto.
It does. It shows the complexity of these deals, so I'm sure that's why you want to get dialed in with the exchange company, probably way before you go to sell the original property and make sure you're structuring everything correct, right?
Mm-hmm.
Okay, and then AS mentions or asks a question, does the mortgage on the replacement property have to be greater than the mortgage on the relinquished property to avoid a boot?
So the mortgage on the replacement property have to be greater than the mortgage on a relinquished property to avoid a boot. Let's keep that question in the chat, and as we're going on, let's see if we can
Sure.
do some research and get an
Yep.
answer. And then
Absolutely.
it's between $600 to $1,200 for fees for a qualified intermediary for
Nice.
Luis
Okay.
there. So typically these companies are going to charge about 600 to 1,200 bucks, but if it's keeping 10, 15, 20, 30, sometimes 100, $200,000 in the borrower's pocket, we could say it's the cost of doing business.
Mhm. Okay, excellent. All right, let's move on the presentation here. We'll get back to some Q&A here in just a minute. So what do we have here, Brennan? Is this the HUD one from the previous cell? No, this must be for our new deal, right?
Yep, so this is actually from the previous sale. So as
Okay.
mentioned earlier, the two main documents that we're going to need is the final CD or the HUD from the sale of the previous property, as well as that letter that we saw in the last slide. So this shows instead of the money, that 98,430 bucks, instead of it being as cash to the seller, highlighted on the bottom, the seller's not walking away with the penny in this particular transaction. Instead, what's occurring is that it's all going over to the qualified intermediary. They're going to hold those funds. They're going to essentially keep them locked up and then apply them towards the new property. And they're going to ensure that those funds are meeting the IRS requirements as long as the borrower does their end of the business and gets everything closed on time.
Excellent. All right, nice. Okay, let's go into our conclusion next steps, and then we'll get into some more Q&A. So recap. So we know a little bit enough to be dangerous on this program. How do we get going? What are kind of some of the next steps that we should be taking?
Yep. So with this, I think that we can kind of understand and see what it looks
Mhm.
like with the 1031 exchange. You know, the big picture is we're going to be deferring those tax liabilities, not eliminating them. And then just to be super cautious with this. But next steps, you know, again, educate your clients, work with them, and identify opportunities, right? This is something I don't want to pretend like you're going to run into this every day. And lots of LOs have different types of clientele. So if you're dealing with a lot of first-time home buyers and things like that, then maybe you don't have too many opportunities to utilize this. But other folks are working with experienced real estate investors, and they have a lot of their clientele in that field and in that space and in that world. So go ahead and mention this, educate your borrowers, and it can be a value add, right? You're going to set yourself apart as an LO if you're bringing really knowledgeable things. It doesn't matter if somebody else is maybe able to get a slightly better price when you have knowledge and experience that's building a lot of value to the borrower.
Excellent. All right, I appreciate that. Let's get into some more Q&A here. We have some on the board, and we have some that were sent in prior to. So we'll try to cover some of this stuff while we have time. So yeah, let's go back to that question on the boot. So we're relinquishing a property. Does the mortgage on the replacement property have to be greater than that property that were relinquished to avoid the dreaded boot?
Yep. So let's first kind of zoom out and define what is a boot. So the idea of a boot is it's defined as like a profit or something received in addition. And so with real estate, to put this into context and in terms of the 1031 exchange, it's the portion of the transaction that does not meet the tax-free criteria
Mhm.
of the exchange, and then it's going to be subject to immediate capital gain tax, and that could be things like mortgage reduction or cash proceeds. And so to be perfectly blunt, I'm still kind of digging into this scenario, but I think the premise is that the mortgage balance needs to be greater than or equal to the previous mortgage balance. and it is there to avoid people attempting to avoid taxes. So I'm still doing a little bit of research on that in the background.
Mhm.
And then any other questions that we got there, by the way, Mike?
Yeah, well, I've heard this term before, and I don't even really understand. So maybe you can enlighten us. I've heard the term reverse 1031. So can you kind of break out what that is? Is that something that we do here at A&D?
Yeah, so reverse 1031 exchange is not something that we're going to be willing to offer here. And
Mhm.
let's explain what that is. So essentially, the borrower acquires the new property prior to closing on the sale of the previous property. And if there's no mortgage lender involved, maybe this is something that can be accommodated with the tax code. However, us as a mortgage lender, it's one of those things that we're not going to permit because it's almost like we're putting the cart before the horse. We're going to, as a lender, say, hey, we need to verify that you have 200, 300,000 of verified assets in order to close this transaction. And in order for a reverse 1031 exchange to work, they actually have to close on the purchase before
Right.
selling the previous house. So we're going to say, hey, that has to be sold first in order for us to feel comfortable.
Great. Another question we got, I mean, I know A&D is really known for non-QM, but we do a great job of conventional FHA financing. So with that being said, are there any program restrictions from an A&D perspective of who can utilize a 1031 exchange?
Yep. So A&D, we're not going to restrict it. If it's non-QM, it's good to go. We don't have any guideline restrictions for this. We're pretty open to it. And then similarly, conventional will permit this as well. Now, one caveat, VA and FHA,
Hmm.
those programs are traditionally for owner-occupied transactions, so they will be ineligible for 1031 exchange.
Okay. Excellent. I have a question from Linda asks, can a client avoid the qualified intermediary? I'm still having problems saying that word. If the sale of the investment property closes escrow simultaneously with the closing of a new property and still do a 1031 exchange?
I believe in the IRS tax code, they do require there to be a qualified intermediary. So in order for it to be eligible, I believe that would be required. Now, again, um, feel free to do your research and dig into the IRS guidelines. They might have a little niche thing carved out for that scenario, but I'm unaware of that at this time.
Okay. We have a question that asks if there's guidelines on our website. We do have guidelines, product guidelines, and we have mentions of the eligibility of using 1031 exchange for assets. So that is on our website when it comes to specific 1031 guidelines. As Brennen mentioned before, we don't make our living, thankfully, as tax professionals. So you definitely want to get with the tax professional or qualified intermediary or exchange company to get more details specific to the inner workings of 1031s. I think that is the questions that I see here. Any other final words or advice on processing these loans specific to A&D or just in general, getting into this kind of new realm of business for us?
Yeah, so I guess, the takeaway is listen, right? So I mean, you guys are sales folks. I'm gonna be honest, I've been in operations for quite some time, so maybe my sales is a little bit rusty here,
Oh, you're
but
pretty good.
but back when I was doing it, so much of sales is listening and identifying these unique opportunities. So make sure you listen, but then also to identify those pitfalls, because if you're not actively listening, you might lose the opportunity to present this option to the client. And if you're not actively listening, you might present them something that really might not be the best fit for your borrower. So I think it's good to be knowledgeable. And again, we appreciate what you guys do on the sales side as well, because without you guys, there is no operations.
Well, I appreciate that. I'm going to just finish with a couple of final words about A&D, but I will remind you, I mean, it happens all the time. We get off a call and then you remember a question that you have. Just reach out to your salesperson or submit a scenario request on our website, and we can have someone reach out to you and answer your questions as quickly as possible. But we do, as A&D Mortgage, we do want to be your partner for growth. We like to think we offer one of the most streamlined loan processes in the business. We definitely, you see Brennen's here taking the time out of his day because he has a can-do attitude. So we definitely bring that across the company. We look at any way. That's why we try to bring, exciting training and different opportunities for you guys. We're always looking for ways to help you grow your business. And without a doubt, we have some of the most flexible underwriters in the business. So we definitely want to be a partner for you moving forward. We do have, like this call, we offer a lot of training. It's a big part of kind of our belief here at A&D is education. So we host broker webinars. This is a great way to either, if you're a new client to A&D, or what do you want to learn how to become a client with A&D Mortgage, or if you just want to get reacquainted with some of there's been a lot of updates and process and systems and those kind of things. Broker orientation is a great place to get all that information. The next one is coming up on April 9th, so make sure you get registered for that. And we also have a technology presentation coming up on portal stuff. That's coming up on April 25th. So make sure you get that information as well. We are hosting presentations, trainings, whether in person or in this kind of format, a couple times a month. So definitely get into andmortgage.com and you can get all that information on our webpage. If you're interested in becoming a partner, you'll obviously get the link when you get this presentation, but there's a QR here that you can scan and work on getting approved with us. We really appreciate your time. We know how precious your time is, especially in a market like this. So we appreciate you taking the time to join us this afternoon. If there's anything that we can be of help, please reach out to us. You can get contact information and everything on admortgage.com. Definitely connect with us, and we will see you again soon. Brennen, parting words. That's
have
perfect.
A great year.
Everyone have a great day. Thank you so much.
Yep.
Bye.